Well, in this video, we intend to introduce you to one of the most important oscillators in technical analysis and one of the most powerful oscillators, namely the Relative Strength Index, or RSI. A famous oscillator that the father of technical analysis invented, and most analysts use it in their analyses. Let's see how to work with this oscillator and how we can get the necessary signals from it. To call the RSI oscillator, I use the Report tab and the Add Indicator window down here, and in the filter I type the term RSI. When you type this term, from the list that appears above, we click on the third option, which is RSI, our Relative Strength Index, and the information related to our RSI oscillator is visible on the right side of the window with a 14-day period, which we do not alter at all. Down here I have my RSI chart, and the three important lines of 30, 50, and 70 that we have previously discussed in analysis are also here. Well, we don't deal with the colors. The colors are okay, the type of line as well. For the thickness, I increase it a bit so that my RSI is more visible. Set the lines to 2, and the thickness of the RSI itself to 3. Then by pressing the confirm button down here, you actually see the RSI oscillator on the stock's price chart. The difference between this green chart and the one above is that above we have the stock's price chart, but down here we have the stock's relative strength. What does this strength mean? It means that when the RSI is increasing, it indicates that the energy of the stock's upward trend is actually increasing. And when the energy is depleted, the RSI gradually starts to decrease, and vice versa. But as we learned earlier in the educational videos about RSI, the RSI has a range between 0 and 100. Look, guys, this area that I'm showing is the 0 area of the RSI, and it continues to reach the 30 line. Then it goes to the 50 line, and then to the 70 line. And these areas are actually the 100 areas of the RSI. And we previously mentioned that you can drag this RSI up or down. You can make its value smaller or larger and actually use it. But the amount you drag should be such that you can clearly see the RSI and the 30, 50, and 70 areas. If you remember, we said that in this area, meaning the area below the line, are the oversold areas. These are the emotional selling areas of ours, and in the 70 to 100 areas, they are actually overbought, or emotional buying areas. Yes, that's the RSI. This means that when the RSI is in these areas, the purchases are completely emotional, and this stock has already been anticipated, so it needs to start declining. Conversely, the areas where the RSI is below the 30 line are oversold areas, and they are among those areas where buying on the stock should increase, and we have emotional selling areas. The signals we received from this RSI were two main types of signals that are very important. One is actually the signal related to when your RSI is below the 0 line. Now, if we look at this area together, here exactly the RSI has gone below the 30 line and is actually breaking the 30 line upwards. In this area, I can get a buy signal from the stock's price chart. Therefore, I definitely regard this area as a strong buy signal, one with this signal. And interestingly, when you consider this area as a buy signal, right in this area you are purchasing the stock Shoma at a valley in the best price area. And also when my RSI for the first time, see now in these areas, in none of these parts has the RSI gone above the 70 line. When it goes above the 70 line for the first time, and in that area it actually breaks the 70 line from above to below, it is a sell ball signal. for us that we should consider as a sell signal. I refer to this area as a sell signal. I consider it. Well, look guys, if you considered this area as a buy signal and correspondingly this area as a sell signal, you would have bought the stock at this point. And at this point, you would have proceeded to sell the stock. Alright, let's see how much profit we could have made from the stock. If we relied on this RSI signal enough, we've been able to make about a 25% profit from the stock at this point. Well, in different areas, as you can see, the RSI shows different, or for example, look at this area, we have a buy signal here, and in the following areas a sell signal, or in this area we have a buy signal. Look, right here I have a buy signal. This is considered a signal. I consider this a buy signal, and this is the corresponding area where I could have bought the stock on the price chart and where the RSI moves from top to bottom exactly. In this area, it crossed from top to bottom. I consider it a sell signal, which could have been this area, and according to the lines of change, we could have gained a 37% profit from the stock. But the next point regarding the RSI is very, very important and must be kept in mind, is the phenomenon of divergence on the RSI, positive and negative divergence on the RSI that can help you so that in fact the next process chart of the stock price can be observed with clarity. Let's see if we could have seen this phenomenon here on the RSI or not. Look right here guys, a trend where I see two peaks from this upward trend. One peak in this area and one peak in this area. And when I connect these two peaks, a line from the geometric location connecting these two peaks, a line with a positive slope is seen here. But on the RSI, I see two peaks. One is this peak and the other is this peak. And if these two lines, I connect them together, I get a line with a negative slope for me is created, and this negative slope line indicates that I am actually observing the phenomenon of negative divergence from the second peak. Now here there are two peaks. We can see more peaks here as well. In the phenomenon of divergence, there is no problem. There is no issue if you have more than two peaks. There is no problem at all. And in that area, I should then witness a drop in the share, which you can see has happened quite powerfully. And we have witnessed a significant drop in the price chart of the share from this area to that area. Well, just as the phenomenon of positive divergence occurs in fact, the price chart of the share, the phenomenon of negative divergence, which we also saw, we can see a positive divergence phenomenon together. For example, look at this area. Here, I actually see a downward trend on the price chart of the share. And in this area, exactly, two valleys are observable. Two. The valleys that you see here are from the geometric mechanics of connecting these two valleys. If I draw a line with a negative slope is created. But if we look at the corresponding valleys on the RSI together, exactly in this area, I am seeing two valleys that from the geometric mechanics of connecting these two valleys align with a slope, positive is created. This example is a clear case of positive divergence. And after that, from the second valley, we should witness an increase in the stock price chart. As you can see, the increase has occurred strongly on the chart. I will also show this part in green. Well, this significant increase that you see has occurred on the chart. Now, let me differentiate the color of the chart from the price chart so that it can be seen better. Well, look. Dear friends, please note that we have previously explained in the phenomenon of positive and negative divergence on the RSI, we are actually dealing with the peaks in negative divergence. That is the peaks of the stock price chart and the peaks of the RSI. The slope of the chart line will always be positive, while the slope of the RSI line will always be negative. And after that, we witness the decline of the stock price chart. But in the phenomenon of positive divergence, we are dealing with the troughs. We are dealing with the valleys. And the slope of the line, meaning both the value of the chart and the value of the RSI, and the slope of the line related to the mechanical connection of the valleys in the stock price chart is negative. The RSI is positive. If this happens, we have the phenomenon of positive divergence, and after that, we will witness an upward trend in the stock price chart. Divergence phenomena, dear friends, are very, very important and very powerful. When they occur, they strongly indicate their target. So, in my opinion, yeah, you're on the right track. S, give 30% weight to the RSI signals. S, from bottom to top for your final decision making, that's what I mean. Give 30% weight to the actual RSI signals. S, and give 70% weight of your decision making to the divergence phenomenon, and work with the divergence phenomenon with strength. See, dear ones, up to this point, we have learned how to use different analytical methods. In all the videos, I try to emphasize this point as much as I can remember. You are going to learn all these methods, and for the main and final analysis of a stock, we will again, in future videos, provide videos where we fully analyze a stock. Again, in the final analysis, we use all these methods, and then we learn how to make our final decision for buying or selling a stock using all these methods. Keep this point also strongly in mind and actually learn all these analytical methods that I teach you, step by step in order. That means don't watch the videos randomly and sporadically. Watch the videos from the beginning, learn the methods in order, don't skip ahead, and don't watch them scattered. Learn the videos in order, and we will continue to teach you how to use all these analytical methods to make a precise and comprehensive decision about buying and selling a stock's price chart. Stay with us for the next videos.